Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski.
Yesterday, December 10, the Federal Open Market Committee voted 9-3 to lower key interest rate by 0.25% to a target range of 3.5–3.75%. This led to a weakening of the dollar and a strengthening of the euro. In addition, the Federal Reserve announced that it will begin buying short-term Treasury bonds starting December 12, effectively turn on the printing press again. While the scale of these purchases is not yet comparable to classic QE, the Fed's actions are aimed at supporting the economy. As for today, only the quarterly unemployment rate in Italy and a Eurogroup meeting are expected. These events are unlikely to negatively impact the euro. However, if the pair declines, we expect initial signs of buyers around the support level of 1.1676. We could plan to buy the euro only after false breakout forms, which will provide an entry point for long positions with the aim of recovering to 1.1706. A breakout and a retest of the range from above will confirm the right actions to buy euro, anticipating a larger push towards 1.1726. The furthest target will be the high at 1.1753, where you could take profits. If the EURUSD declines and there is a lack of activity around 1676, selling pressure on the pair will intensify, and bears will try to overshadow yesterday's gains. Sellers will also look to reach the next interesting level of 1.1649. And only the formation of a false breakout there will be a fitting condition for buying euros. You could plan to open long positions immediately on the bounce from the low of 1.1619, with a target of an upward correction of 30–35 pips intraday. Sellers of the pound experienced another defeat yesterday, but not everything is so straightforward. The Federal Reserve's mixed stance can quickly turn in favor of the dollar, leading to a market reversal. In the event of further EURUSD growth in the first half of the day, bears can aim for the nearest resistance at 1.1706. Only formation of a false breakout will provide an entry point for short positions, with the aim of moving to the support level at 1.1676. A breakout and settlement below this range against very weak data from Italy, along with a retest from below, will be another suitable option for opening short positions, targeting the area of 1.1649. The furthest target will be 1.1619 area, where you could take the profits. If EURUSD moves up in line with the trend, and there are no active bearish actions at 1706, buyers will have a good opportunity to continue developing the bullish market. In this case, it's best to postpone short positions until a larger level is reached at 1.1726. Selling there will be only after a failed breakout. You could plan to open short positions immediately on the bounce from 1.1753, targeting a 30–35 pip downward correction.
Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents.
You could plan to buy the pound today upon reaching an entry point around 1.3373, targeting growth to the level of 1.3399. At around 33.99, you could intend to exit the market and sell immediately in the opposite direction, aiming for a movement of 30-35 pips from the entry point level. Expectations of strong pound growth can only arise after good data. Before buying, make sure that the MACD indicator is above the zero mark and is just starting to upward move from it. You could also plan to buy the pound today if the price tests 1.3354 twice in a row, while the MACD indicator is in the oversold area. This will limit the pair's downside potential and lead to an upward market reversal. A rise can be expected to the opposite levels of 1.3373 and 33.99. You could plan to sell the pound today after the 1.3354 level is reached, which will trigger a quick decline in the pair. The key target for sellers will be 1.3329 level, where you could intend to exit short positions and immediately buy back in the opposite direction, aiming for a move of 20-25 pips. Sellers of the pound will show their strength in case of weak data. Before selling, make sure that the MACD indicator is below the zero mark and is just beginning its downward movement from it. You could also plan to sell the pound today if two consecutive price tests of 1.3373 occur twice in a row, while the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a market reversal downward. A decline can be expected to the opposite levels of 1.3354 and 33.29.
That's all for today. See you online soon.